Good morning, traders. It's the first day of spring here, a wonderful time. Lambs will be being born, bouncing around the green meadows of the UK and right onto my dinner plate. Morning, guys.
Morning.
Love a bit of lamb.
You're funny. You're a
Can't beat
funny
lamb
guy.
chop.
Remember the
you
movie?
got like a bit of lamb in Greece, don't you?
Yeah, we do. I'm not a fan, but we do, yeah.
You're not a fan?
No.
Get off the show. Get off the show.
It smells weird.
What? I could say something about your wife's cooking, but I won't.
Yeah. How are you, Ryan? How's your day?
Yeah, all good, mate. You?
Good.
Yeah, Kay, how you doing, mate?
Yeah, all good. I love a bit of lamb as well.
Yeah, lovely. Any young lambs bouncing around the fields of Dorchester?
Right. Don't eat it raw still, okay? You have to...
What? It's not like sushi. Damn.
No, a bit chewy.
I never had lamb sushi in Japan, no.
And I doubt you will either. Well, next time you're over still, I'll cook you some nice lamb chops and we'll change your mind about that. Okay,
deal.
Anyway, talking of lambs to the slaughter, let's see what's happening in markets today then and yesterday. No more banks to the slaughter. So, well, we've had a day off. Some bank going pop. Nice. We've had the RBA minutes out overnight and some are taking it a little bit on the dovish side, but it's a bit mixed for me. A couple of key comments. The headline was that the board agreed to reconsider the case for pausing at the April meeting. They say pausing would allow time to reassess the outlook for the economy. So a mildly dovish slant there, but we knew a bit about that from the last meeting. But then a couple of lines down, further tightening of monetary policy is likely required to bring inflation down. So your guess is as good as ours. Are they on pause? Are they not? I guess we'll have to see the next round of data like every other central bank. And we'll come across to the Bundesbank, those wonderful folks in Germany, and they say the economy is heading for contraction in Q1. They might be right. We had the German zoo number out this morning. Not the greatest, missing expectations, coming in lower at 13 versus 17.1 expected and well down on the 28.1 prior. Current conditions much worse at minus 46.5, worse than last month and missing on the expectations. So a lot of worries coming around in Germany about possible recessions. I don't think it's anything that's going to be major. We've been saying for a while now, we expect economies to maybe just sort of flatline around plus minus 1-2%, something like that. So don't be surprised to see negative numbers coming in from Germany as everywhere else. The floodgates are further open on the ECB after last week. ECB's Visco says the Eurozone needs to quickly have a deposit protection tool like the one the United States have. Eurozone deposits at banks are protected up to, I think, 100,000 euros, isn't it, Dale?
Sorry, what? 100,000?
100,000 euros, I think bank deposits are. So
exactly,
I'm not sure what sort of tool he's talking about, unless he's talking about an all-encompassing one for all deposits. But good job finding the money for that one. He also says we have all tools to counter any liquidity crisis. EU banks have no issues of capitalization or liquidity. On rates, he says the ECB must evaluate the pace and size of hikes meeting by meeting. Greek man, ECB Stonas sees no danger of a new banking crisis in his country.
I have to laugh at that.
Yeah, I'm pinning that one on my notice board. Save it for later.
Let me ask one thing. Have we ever heard banking person or a central banker saying there is a potential for a banking crisis? Have we ever heard that?
No, I think it was Greece when we had the banking crisis.
Well, after the banking crisis,
or was it Cyprus? I can't remember.
Nobody will say that before. Anyway,
no, exactly.
Sorry, yeah.
And Some dovish comments from him on rates, saying we are close to the end of the tightening cycle. Rate hikes are mostly a story of the past. But on interest rates, we are giving no more forward guidance. It will be data dependent meetings from now on. ECB Centeno says there is a set of factors that point to a build-up of inflation tensions, and it is not so much the level of interest rates that is high, but the speed of the rise. ECB's Kazakhs, it's not possible to say that we've stopped hiking. Doesn't say that they are going to continue hiking either. ECB's Acost can't validate market expectations of a 3.25% rate peak. Not sure where he's getting those expectations from, because they were slightly higher than that, edging up towards 4% before this bank mess started. Now, ECB's Lagarde was speaking in Parliament yesterday at a banking finance hearing, similar to Powell's Humphrey Hawkins. Nothing much really of note that I saw. I wasn't listening too carefully. We heard it all last week, and it was pretty much a repeat of last week. She said the ECB has more ground to cover based on the current baseline. There's that key word again. Without tensions, ECB would have indicated that further hikes would be needed. Eurozone banks' exposure to Credit Suisse is in the millions, not billions. France, this Macron no confidence vote, he passed it, but it was very close. It came 9 votes short of the no confidence vote. So he sailed by the skin of his teeth on that one. Looking at some of the rate expectations, the SMB is coming up after the Fed, and a Reuters poll say economists they're going to raise by 50 basis points. Say 21 of 27 economists, 6 see only a 25 pip hike. So mainly people looking at the 50 there. Some pricing had it much lower, as I pointed it out yesterday, maybe even unchanged or 25s. But I think they'll still go a 50 unless they signal that there's bigger problems going on with Credit Suisse than we are led to believe. Oh, well, mate, Brexit, I told you this. I've told you this 1,000 times. It's never done until it's done. So we had all the Windsor framework, as it was called, the grandstanding deal to solve all deals, and the Northern Ireland stuff. But the DUP will be voting against it at this week's vote in Parliament. However, it doesn't mean much because they have a very, very small minority in Parliament. And even if they vote no and everyone else votes yes, they won't have much of a say in it. But that still may create problems further down the line. A spokesman for PM Sunak said he is confident the Commons will back the Brexit deal and that there's no plans for the substantial changes to the framework. So we'll see how that goes later on this week. Right, coming back to rate expectations and the cocktail shaker that we've been seeing for those. Traders have raised ECB tightening bets and now favour a 25 pip increase in May. So pausing is being washed out again and we're favouring hikes. BOE has priced a 25 pip cut fully by the end of year end for the first time in just over a month. Goldies expect the Fed to pause tomorrow due to stresses in the banking system. But JP Morgan's one of their chief economists says they see the Fed moving by 25 pips. And while we're on to the banking crisis, the US is looking at ways to guarantee all bank deposits if the crisis grows. So at the moment, they have an upper limit of 250,000. Everyone else can go whistle, but they are looking at maybe guaranteeing all bank deposits. That number runs into the trillions. So I'm not sure how they'll fight it entirely if the whole world goes pop. But if the whole of the US banking goes pop, so will the US. But that's what they're doing anyway. The EU has taken a different line to what the Swiss did regarding bondholders. They are vowing to respect bondholders' rights after the Credit Suisse turmoil. This was all to do with the AT1 bondholders getting creamed. A lot of moaning and groaning. There's still going to be plenty of fallout from this, maybe legal action from the bondholders. We've already heard that there's a group of lawyers who are speaking to certain bondholders about maybe legal representation. So there is going to be some fallout still from this, at least on the legal front. As we've been saying, this AT1 bonds are a big way of banks to raise capital. So if the market now thinks that they're not as sure as they were before, and by and large they are a very high risk asset, it could shutter the market entirely. That'll cause a problem. Citi says it has insignificant exposure to Credit Suisse's AT1 bonds, and JP Morgan says it has no exposure to that at all. But what JP Morgan has exposure to, I saw this story this morning, is that they had $1.3 million worth of nickel in a warehouse in Rotterdam that turned out to be bags of stones.
Amazing.
I'm going to laugh. Bags of stones. I mean, how this? I've worked in the. I started my career in the LME. How you even get bags of stones into an LME warehouse disguised as nickel? I don't know. I don't know what they did.
I think if they start searching LME and COMEX warehouses, I think they're going to find a lot of skeletons there.
Skeletons are probably worth more than stones, but I get your point. Anyway, so they've got $1.3 million worth of rubble sitting in a Rotterdam warehouse. All fun and dandy. That's it from the headlines, as far as I can tell. You guys got anything worth noting?
No, it's been quiet around the Xi Putin meeting, right? So far, it's only been a love story when Xi arrived. He must have put some sort of a serious deal, perhaps on the table with Ukraine, because heard the Kremlin say that they need to study the project. So perhaps there's a little bit more than just we are supporting you and we are going to send you weapons or whatever, or it's the disaster plan. And but we haven't really heard too much about it so far. So expecting a few bombshells to hit the wires regarding the plan perhaps later today. No, for the rest, no. Well, JP could perhaps sell the stones to UBS to ring fence the Credit Suisse investment bank or so. Maybe they can get some money back from him.
You know they're going to be trying to flog on one way or another.
Yeah, I think UBS is a good candidate to buy that lot over.
I wouldn't be surprised if Credit Suisse bought them 2 days before they went balls up. They probably have their hand in it somewhere along the line. But anyway, yeah, I'm not sure what to make of this Russia-China stuff. I mean, it's
too early.
It is too early, but we potentially get a statement today. If we get a positive headline that Russia is prepared to, something like Russia is prepared to take seriously China's peace plan or whatever, that could be a big risk mover.
Yeah, but then you have to see what it is exactly, right?
It could fall out of bed if Ukraine says no, that's crap, we're not listening to it.
Yeah, I mean, because it may be that. Well, I mean, it's only guessing, right? But that the plan is something like, Ukraine sheds, I don't know, Crimea and Donbass, and then everybody goes back home and feels happy, or and a few guarantees that Russia won't invade for the next 12 years or so. And I don't know. I mean, it's just a wild guess what's on the table right now. But the fact that, and perhaps if you look at the markets, it may be that the market is reacting a little bit in that way, because if you look at the way euro crosses are monster bid this morning, I don't know, perhaps some had a peek at what the plans are, and that's putting a bid under the euro. The euro is extremely bid this morning. Risk is bid this morning. I don't know. Yeah, it's if the plan is anything realistic, I guess we're getting a bit of a sample of what it may mean for the euro, right?
Yeah, well, they did put forward this 12-point plan, which largely got brushed out of hand by Ukraine. But there's lots of different talk. There's people pointing to the Iran-Saudi Arabia peace talks that China brokered. Could they be doing this again to show them part of the big global stage? Look what we can do type thing. But I think it really is an open book. I think there's going to be a bit of volatility around this. If it's not peace, that means the war's going to drag on, potentially get worse. Maybe the market or Western governments see China as back in the war. It's one of these things. I think the volatility is what we've got to be careful of. It could just be a headline mess. So yeah, just a bit of a risky event to keep an eye on that could come out of nowhere. So don't be surprised if you suddenly see markets go potty over one headline or two headlines. But we can't do anything about the known unknowns, unfortunately. So we have to get on with it and roll with the punches. So this morning we are seeing a bit of a tick up in risk, as Kay mentioned. Yen pairs moving higher pretty much. Euro looking a bit more positive. Dollar yen definitely looking a bit more positive. Euro dollar, as you can see on the screen there, we're just nestling up against this prior high around the 60s, which has been a former bit of a level on and off over the past few months. So that's why we're knocking our heads against there at the moment. We have made a bit of a positive move initially by opening up above 107, and that's found as support at the moment. So again, whenever we've seen the price opening above 107 on a daily basis, we have seen a move up to these highs and towards the 108s. I'm still long in this one. I've just this second taken a little pinch off at 56 ahead of that 60 level. I'm going to look to see if we get a run up to those 108s and see where it goes from there. But positive vibes at the moment all round, and we know these can be on shaky ground. We've seen these bounces before, only to then make new lows. What is encouraging for dollar yen is we're back above this little zone here. This 130.50 area is now going to be the next big watch point if we head towards the downside. The fact we moved up and then we came down to the 131, couldn't get much lower, could be a bit of a signal that maybe we have found a bit of a temporary bottom. If you look at the prior price action when we came down, we had a low, we matched the low, we made a new low, bounced, made a new low, bounced, made a new low. Well, now this may be a switch to the other way where we make a series of higher lows. I still don't trust this. We're still, as I said, 1-2 headlines, banking, China, Russia, whatever, away, and we may see further downside coming in. But for now, the mood this morning is a bit positive, and that can be seen in yields as well. Keep an eye on the short end. 1 year yields, pretty much looking the same as dollar yen, as are most of the yields at the moment. So we're bouncing back a bit on those. Could be just some bit of position squaring on these moves as we come into the FOMC. People taking a bit of money off the table, don't want to be overly heavy in risk going into that event. Market is largely expecting them to go the 25 pip hike, but there's still a decent window for a difference move, or maybe a dovish 25 hike and a pause after, or signal of a pause after. So lots in the mix at the moment. No real data out today, apart from Bank of Canada, apart from Canadian CPI. That's about the only major data we've got on the calendar for the US session. So yeah, I'm pretty much watching, see what happens. I'm not getting too involved one way, one side or another in any of these pairs. Keep an eye on dollar China. Not doing an awful lot at the moment. Bit of ranging. Doesn't really know what it wants to do on this one. Still looking, maybe we're going to move up to the 7s to look at potential shorts. Doesn't look like we're going to be getting another move down towards this low area in the low 80s, but you never know. Down towards there is where I'll be potentially looking for longs just to just to play the range on this one. Kay, you got anything, or Stel, you got anything you're looking at the moment, or you just feet up waiting for the Fed?
Yeah, for me, the stuff I showed yesterday, nothing's changed today. I'm still waiting for the Fed, and it's a big question what they're going to do. There's two very distinct camps. One is their policy doesn't have anything to do with banks, which in a way it doesn't, but we all know how confidence plays a major role, especially during crisis. And the other side says, actually, there are people calling for cuts. Nomura calling for a cut, right? But yeah, I think theoretically they shouldn't pause. Theoretically, they should do 25, see how things go. But in practice, I think they're probably starting to lean towards pausing. But you know, I'm not sure. Obviously, I don't know. I'm not Jay Powell. Am I still long silver? Yes, I am. DJ is asking, and I'm a buck in the money, so I'm not too worried. And I am going to add. Am I going to add higher or lower? I don't know yet. But I'm still waiting. I don't have anything else to say, so I don't know if Kay.
Yeah, you're a patient fisherman.
I'm still a patient.
Patient. Yeah, definitely. Euro sterling, just have a look at quickly, because it had a little bit of a move towards that level again. Didn't quite get down as far as the prior low, but it's held there. Now deciding whether it wants to get back above this 60-80 zone or 60-70 zone, whichever way you want to look at it. If we did start to build above here, then we're probably heading back towards the 88s. 88, 20, 25, 30 is the near-term resistance above 88. Need to keep an eye on. Again, this one might start to build a little bit of a lower range between that 88, 20, 30 and down towards the low 87s. But the levels are playing nicely. If you've got the patience to wait for the support levels, they are working once again. Look to do the same with resistance on the other side as well. Kay, you finished early yesterday, so I'm sure you've got plenty to tell us today.
Yeah, I got a couple of things to talk about. So if you want, I can grab the screen.
Yeah, take it away.
All right, here we go. You guys see me?
Yep.
Oh, that's the dollar yen you were talking about. As I was saying already on the, I think F.A.C.E yesterday, and perhaps showed this stuff. This is the Fed pivot in 2021. And again, the 130.5 is 50% is 130.5, and again it showed up. So I think this level is really one that we should pay very close attention to what happens if we get any other negative lines, or as a reminder, we are at the end of the Japanese fiscal year, so there may be some flows deriving from it as well. It's very unclear what's to be done. Sorry, as I've already mentioned, it's been such a volatile year in bond markets, in energy markets, in all markets, that it's very, usually I have a pretty decent idea what may have to be done, but this year it's an absolute wet finger up in the air. We really don't know, and I've been talking to other people as well who are still in the markets, and they are saying exactly the same. We don't know what's or if there is even a lot to do for the end of the fiscal year over there. So 130.5. That's the first point, and then we are looking back at which is also a trend line coming in. This 127.5. That's medium term, okay. But looking at the volatility in yen, we have to take into account those more medium term or whatever points, and that's going to be around 127.5. Just have a quick look at where today's it's 132.70 is, well, 132.70 is the top end of the cloud. And look where we tested again. We tested the bottom. Was yesterday morning? Yeah, we absolutely tested the bottom there. That comes in around, came in at 132.25 and 130.40 or so. Today, this one is at 130.5 exactly. So that's where the cloud is. Top side 132.70. I guess we are going to have to monitor that as well. And then above there, the 133.15, 15.60. That's going to be another area, I think, where it's going to play for dollar yen. To me, with everything that happened lately in the yield sphere, whether it be US, European, sterling, whatever, there was every reason for this dollar yen to break back sub 130, but we haven't. And that already may be a bit significant. It's still a bit early to talk about the new crew, but then as yesterday we mentioned, there's a YCC man coming on board, which may be significant further down the road, but still Ueda, as I've already been saying, is not coming over as the really big reformer yet. So we'll have to wait really until he takes office to know exactly what he will want to do. So for the meantime, I think we are going to range a bit in this dollar yen, depending on whether there's more dead bodies or whatever falling out of closets in the US but I don't think Europe is going to see much more stress, and I think the market understood that, and that's the other reason perhaps why this market is buying euros, is that it's not a pan-European banking crisis that we're seeing. So if you trade risk, perhaps the yen is not your, I don't know, best instrument right now. I think we're more in a bit of a range play right now. But if you say range play, situation calming down, there's maybe a tendency for dollar yen to move a tad up again. And we are seeing it back on the one here. I mean, this euro yen, I mean, everything has been volatile, but this has been really incredibly volatile, right? But fact is, when the dust settles, we've tried twice to break this support trend line, and twice it came under, but then failed, and now starting to rally again. I'm not sure whether I missed the train, because I'm globally seen, I'm not a yen bull, and it could come over a bit strange with some people, but people who know me, they know my very long-term view on Japan, which is not a great one, but yeah, I think I may have missed this one here. We have to look again at this zone in the euro yen, 142.70, 140, call it 142.70, 143, the figure. That's where the point of bullish or bearish seems to be lying. And then on the way down, 141.5, 140.5 should already come in today. Everything else equal as supports if ever we get back down there. And then we are seeing all those euro crosses have been really ramping higher. This is a euro Aussie. It came, we had this how do you call it, triangle or wedge or whatever, and I never know how people in the techies call those things, but anyway, it's held the support here, and we're already breaking pretty violently the resistance here at 159.80. We're already trading above 161. Euro, as we speak, is actually pushing through. It's done another leg, and the crosses are really responding to it. If you look at euro dollar, for instance, let me just put the 1 hour on there. Euro dollar is pushing now through this 107.60 that Ryan also mentioned. There's also a bit of I had a 107.58 in here as well. 50% of that move lower, and that's where we are pushing through right now. And then if you look at what's happening on the Aussie dollar or the Kiwi dollar, they are just standing still. By the way, we are, if anyone listening to us and knows why, I can see somewhere that it failed to get back into this channel on the Kiwi dollar. But if somebody knows why exactly Kiwi is so much lower this morning, we'd like to know, because we're all scratching our head a little bit what's behind the Kiwi sell-off. Okay, we're a bit neutral here, I think, around 61.90. We're again around this 61.90, 62, the figure, which has also always been a little bit of a bit of an intermediate station or bounce level or a break level, and we are hanging around again. But yeah, Kiwi is suffering today, and we're also finding it back on the Aussie Kiwi, which was looking very offered again until Friday, yesterday morning, and now it's breaking back through this downsloping channel. The top line here is around 107.60. I guess that anywhere here in this zone, 107.40.60, we will find support now on the Aussie Kiwi. And we're monitoring the 108, right? Where we are monitoring 108, the figure. If that would give way, there may be a case for this to go back to this zone here, where it's a clear traffic area on the Aussie Kiwi. When the Aussie goes, Mike, when the Aussie goes down the stairs, the Kiwi takes the elevator down. Yeah, could be. But yeah, so that's what's going on in the Aussie Kiwi right now. I wanted to show something different. Yes, metals. So we've had this. This is around 203-ish. We had this move higher when the crap hits the fan in the markets. We have seen this flight into gold, and then when you see that the situation quiets down, we are seeing exactly the opposite move. But we have to be a bit careful, because the whole thing may not be over as of yet. This 202 is actually the 127 extension of this move, for those wondering, because it's not very clear on my picture. So now we have to look at what happens around 1960 here. That was a bit of a break level before. Should come in as a first support. If that wouldn't be enough, then we're looking at mid-1940s to high 1930s on gold here, but that will all depend whether the situation quiets down more. Again, as we've been saying in the room as well, and perhaps Ryan mentioned it, we are in pre-FOMC territory, right? So today into tomorrow, we may see a bit more funny moves. So for what the dollar pairs are concerned, I think we are going to be more in a range pattern than really picking one side or the other. And then after the FOMC, we will see whether it's the less stress or the situation calming down, whether that continues where we will have been before the FOMC, or where we were coming out of the FOMC. So then it will depend on if there's still stress in the system. If the FOMC doesn't give the market what it likes, this could take off again. If in turn we're going into the FOMC and all the stress is going out of the system, relatively speaking, of course, and the FOMC gives the dollar bulls a little bit of a bone to chew on, then we're probably going to see the test of these lower levels. For the time being, I'd say rangy. I'd be surprised if today retakes this move, and I'd equally be surprised if we go below here. But I could see 1960, 1980, 85. That's possible on the day here. And as we have been mentioning a lot of times, and Stel already mentioned that a few times as well, me as well, silver underperforms when there's a flight to quality, because of the simple reason that it's an industrial metal. If there's stress in the system, if there's less positive vibes in the market, stuff like gold will take the upper hand, and silver will underperform. And now we are seeing this stress going a bit out of the system. We are seeing exactly the opposite happen. Gold has lost 35 bucks or so since the high, and silver is actually only lost 20 cents. If it went a little bit lower on the initial move, but coming out of it compared to gold, it's now overperforming, and that is typical. And we've already been talking about that, but that is a typical move. This gold silver ratio will be moving on the back of sentiment as well. So that a little bit about correlations. What else? Is there anything else you guys want to have a look at? Because I don't know. Yeah, dollar makes. Jesus, that was some thing again. We tried above this 1920 4 times, or above 1910, 1020. We tried it 4 times up there, and it really rejected fiercely, even before the prior points of the spike and low. And that's now, if you look at where dollar mix is trading down, back down to 1969, it's really your risk pair per excellence, especially that when the situation is quieting down, we cannot forget that the MEX is an 11% interest rate currency. So once situation quiets down, I'm not saying it's carry trades as such, because carry trades are much longer term, but the search for yield is still very much there. And if you're long dollar MEX on when it's risk off, you simply cannot hold it for very, very long in current interest rate environment. So keep an eye on the low 1860s. And people know in the room, I was short here yesterday. I was short at 1919, but by the time it came down to this first support, I was out. Oh, it was a nice move, but then there was the double of the move waiting later. But yeah, I mean, look at the MEX. If the situation continues to quiet down, I think this thing is probably going to look very heavy again. If we get, and then we are looking back for the major move, I think it's back to the low 1840s. If it goes down below 1840s, I think the whole stress move is over and out. And then there's one I want to talk about quickly, and that's Swiss. So we've had this whole Credit Suisse UBS saga. So UBS got Credit Suisse for very cheap. Actually, if no more dead bodies than what is known or can be expected fall out of the cupboard, Credit Suisse will actually have bought, UBS will actually have bought Credit Suisse for negative. That's a simple, the simple maths of the whole thing. But what I think, which will happen in Switzerland or in the Swiss now, and it's not purely tech, it's more like an impression and a thought that I have read the Swiss franc is that yeah, we saw this flight into the safe havens or risk off when the shit hit the fan in the US, and even with Credit Suisse. Credit Suisse was going down under when we hit the low in the Euro Swiss. And there would be a bit of possible repatriation to get funds back into the books. But I think when the situation will clear out, there's a clear risk for some flight of capital out of Switzerland. That's just a thought that I have. It's a personal thought, because when you talk about first of all, the banking sector will see a concentration, and that already investors are not particularly liking, because then they don't have a choice of where to park their money. I can see that there's going to be a lot of layoffs coming, especially on the Credit Suisse side, I trust. And then what The third point is that the shareholders, and especially the Middle Eastern main shareholders, haven't had a say at all. So they may be thinking what to do with their money parked in Switzerland for the time being, and they may be looking at diversifying a little bit out of it. And then what I really think is may kill the Swiss a little bit is that whenever there's such a big shock in the system, the regulator will have a very, very close look at what's happening. And the risk is that the opacity of the Swiss accounts may take another knock. And all of those factors making me think that there is a possible, but we have to wait and see if it really happens. But there is a possibility that some of that big wealth money that doesn't really wanted to be seen and felt very safe on the Switzerland parking space, is that they may be looking at diversifying a little bit. I'm not saying leaving Switzerland, but completely. But there is I think personally, there is a bit of a risk that there may be a bit of flight of capital out of Switzerland deriving from this whole banking story. So that's a thought. If you take it on prices, I'm looking for this level here in the low to mid 98s on Euro Swiss for my plan to materialize. That should hold. Already here should be okay, but that to me here should hold. And if we start to move back above this 1001520, we may have a bit of a start of seeing what I think that may happen, and then we will be talking about the high 100s again. I'm not saying that this is going to go all the way back to 108, but in my opinion, at least, this move here should be one that has run on its last legs, and we may see gradually a move getting back higher. And also, by the way, the Chinese situation or the Chinese-Ukraine, let's call it that way, situation could impact this pair as well. Because if it's a good news for the euro, then we should see Euro Swiss move higher as well. All right, dollar Swiss. Dollar Swiss is very, to me, it's a strange one. Look at this range. I mean, you've got the dollar side as well to reckon with, right? I was a little long dollar Swiss yesterday, but then when I saw euro dollar starting to move up this morning, I went out of it, took my few points profit that I had, like 30-40 points on it, and then went out of it because of the dollar. I initially thought as well, if there's good news for the dollar, I should load up on dollar Swiss as well. But I'm really going to be either patient or careful with this one. And I know people have traded this from the short side. If you have a view on the dollar, be my guest. But for the time being, I would rather be looking at the other side. If I get a really good reason to buy dollars, I may be adding this one again to Euro Swiss. But let's see.
It's a difficult one, isn't it? Dollar Swiss, because if you get a risk move, you get the euro dollar moving high, and euro dollar is pretty much the anti dollar Swiss, isn't it?
Yeah, yeah. I mean, in normal times, Swiss is the smoothener of the euro dollar, and in times of stress is the accelerator, right? And as you see, I mean, euro dollar went up a big figure. I mean, dollar Swiss virtually yesterday I bought it at 92.58. It's trading 92.53. In the meantime, we euro dollar went up nearly a big figure, and dollar Swiss is just hanging there, right? You need a clear move on the dollar with a clear bias on the Swiss to really do dollar Swiss, in my opinion. Yeah, you were talking about this dollar China. Okay. It's broken a little bit of a triangle here, but it's too early to say anything about what's going to happen with the situation. If China manages to broker a deal in Ukraine, I think this one is going to take a serious dump. But I'm not. It's not my base case that that it will actually happen. But we have to be ready for every eventuality. Don't forget that they've already brokered the Saudi-Iran deal. If they manage to calm down the situation in Ukraine, I think there may be some, and it could be fast and then stabilizing again, but there could be some inflows in China deriving from it, because a country which is seen as a peacemaker, and then especially such a huge one, manufacturer for the world, could see direct inflows. So that's one I'm keeping an eye on, a very close eye on, to see what they come up with and how Ukraine and the West is going to react to a possible peace plan suggestion over there. Right, that's it for me for now. Just look at the if it starts to break back above, well, okay, you have like then 690.5, but I think this level here is still where it plays ball or not, 692.5, 693. If that breaks again, then we're at 7 in a flash, I think. Yeah, Brian.
Cool, mate. If you stop that, I shall hopefully be able to take it again.
Stop sharing.
Let's see if that works.
Anne was
that works.
I've got a cat. Sorry, Anne, I didn't see you.
Right, I've got dollar CAD right there.
Okay.
Funny enough. Yeah, dollar CAD's looking very solid at this 36.50 level. We've had quite a few tests there. It's a bit of an on-off support and resistance line, as it is. We do have Canadian CPI out later on today, so that's probably something for us to get our teeth into. As you can see there, core CPI expected to dip to 4.8% versus 5% prior. The headline number 5.4 versus 5.9 prior. And then we have the other 30 ways they try and count it with these measures: medium, trimmed, BOC core, whatnot. So pretty much the same trade as we would for any other country. If CPI doesn't come down as much as expected, if it goes higher, that's going to push the BOC to a more hawkish slant, likely to see CAD gain. Bit of a double wind for CAD at the moment. Obviously, oil on the risk bus as well. We're seeing, where are you? There you go. We're seeing a little bit of a bounce, a bit of a tepid bounce, you'd call it at the moment, off these prior lows. So unless we start seeing that getting back above the 70 buck mark as a first point, and then maybe the 73s, this still looks very bearish. But if that does start gaining and we get a strong CPI report, I would be expecting dollar CAD to perhaps move through this 36.50. I really only like to play this one on the wide, looking at the edges, and we've got another zone or another level down at 35.5, but then we get down to the 35s. That's where it gets a bit interesting. We got convergence of moving averages there, the 100 and the 50 5-day moving average. It's a bit of a zone down to around 34.70. You know, it was a break point on the way up, then it's become again another decent support and resistance area. So if you do get a move down towards this 135 area, that's the area I might be looking at potentially for longs. Also see on the wider picture how this potential wedge is going to develop moving in here. This one does like to range between the lines sometimes. It takes a while. You need some patience. I mean, it's, you know, we're talking back to October before this potentially started. So keep an eye on that, because if it does play ball, it can give you some decent pips on it. For the top side, 137s again, definitely up to the 138s, and those prior highs is the top side levels you got to be watching at. A break up there, and we're probably heading towards 140. So decent levels all round for that one. Do your charting, pick the ones you like, and wait for the ones you want to trade. So yeah, that's my thoughts on dollar CAD there. Nikita, you like a euro sterling long? Yeah, I don't know about longing it right here. As mentioned earlier, you know, I have my levels and the decent level was down here. I was hoping to get a move. I missed this one. I was hoping to get a move down lower on this one. Didn't quite get there, so I didn't add anything to my core position. I don't know. I personally would like to long it around this level. Maybe if you get above 88 and it confirms holding above 88, you might get a push higher. But I'll be wary, as I say, the 20, 30 highs up into these prior highs, because we maybe not have broken this trend just yet. See where the support continues to build. But you know, your trade is your own, as they say. So good luck with it, and good luck, Ali, with your dollar yen short. I noted you were short. Kay's mentioned the top of the cloud at the moment is at 132.70, so you got your stop behind that. I'm really not biased to this. I want to be short on the Bank of Japan stuff, but not at these levels. If we've got to move much higher, the Fed being more hawkish, maybe that's something to look at personally. But as for trading the Fed, it's a bit of an open book. I think they go to 25. I think they keep monetary policy going as they've suggested. I don't know how much upside that might give dollar yen in the main. So I'm on my hands a bit at the moment, and see what that brings. And oh, you got in earlier and you're in profit. Good, Nikita. Good to see. And hope it goes to 92 for you, and then we can all jump out and get into shorts. Anyway, thank you very much, everyone. Thanks to Stel and K-Man as usual. Cheers for all your
Ryan.
And have a good day, traders. Thanks for coming to the Flow Show, and we shall see you all tomorrow for Fed Day. And I'll bring some lamb chops for you all. Have a good one, everyone. Cheers, guys.
Cheers.